Good morning. It's Thursday. It's January 29th, and it's a busy day. This is what's on the agenda. Firstly, there is a lot of tech news. Also, the party in metals appears to be getting even wilder, and Trump threatens Iran. Investors are buying a lot of crude, Anna.
Absolutely. The focus on the commodity markets then for all the reasons you described there, Guy. The weaker dollar and other factors pushing commodity prices higher. Metals in focus this morning. Copper up by 6.3%. Do we have to think about demand destruction at these levels? Eurostoxx 50 futures up 0.2%. A lot of earnings, as Guy was talking about. Nasdaq futures up 0.4%. So we might have seen mixed performance from individual stocks after we got some of those tech results. But so far, Nasdaq futures pointing higher. The countdown to the opening trade starts right now.
Good morning. Let's get straight to the earnings story then in this part of the world. Lloyds Bank coming through with a share buyback programme of up to £1.75 billion. The stock is up about 75% in the last 12 months. We know there's going to be a focus, of course, on net interest income, loan growth as well. They see 2026 underlying net interest income at about 14.9. Let's round that up to £15 billion. The estimates had been for around that level. So it's bang in line in terms of 2026 underlying net interest income, the forecast for Lloyds. In terms of return on tangible equity, they're looking at that growing at about 16%. The average estimate had been between growth of 15 to 16%. So that is essentially in line as well. Pre-tax profit for Lloyds Bank coming in the fourth quarter above the estimates. Just shy of £2 billion. The estimates had been for 1.7 billion. So it's a decent beat in terms of fourth quarter pre-tax profit for Lloyds.
EasyJet's easy. Completely as expected. Nothing to see here. Honestly, the first line that came out, results in line with views, outlook unchanged. Revenue 2.26, estimate 2.2. I'm going to move on. I have nothing else to say on EasyJet. We'll come back. There's more exciting things happening. Right. I'm not sure operating profit at H&M is one of them, but tech certainly is, which we'll get to in a moment. But fourth quarter operating profit at H&M has come in better than anticipated. So I'll look for that to move at the open. Let's talk tech.
Let's get to what happened in tech. Tech was really fascinating yesterday. A big day, of course, of results and some real divergence that we're starting to see. Let's take a listen to some of the highlights from their earnings calls.
I think in order to remove the constraint, the probable constraint in 3 or 4 years, we're going to have to build a Tesla Terafab, a very big fab.
Rising memory prices would impact capital expenditures, though the impact on Microsoft Cloud gross margins will build more gradually as these assets depreciate over 6 years.
We're elevating individual contributors and flattening teams. We're starting to see projects that used to require big teams now be accomplished by a single very talented person.
Let's put Tesla to one side for the moment. That in itself is an idiosyncratic, fascinating story. But the key takeaway, again, is if your central and core business is performing, investors will be OK with the CAPEX spend. Meta's advertising business is booming. They are ramping up their spending on CAPEX. They're looking to spend potentially up to $135 billion on CAPEX this year. But investors will relax because the core part of the business is firing on all cylinders. Microsoft is a different question, though. The cloud part of the business, the focus on Azure, yes, growth of 38%, but that growth is slowing. And that is a problem when you see CAPEX coming in above estimates from Microsoft.
When is Meta going to deliver? That's my question. Because it's still an advertising business, right? When does the next bit start to work? Because that's the bit I don't understand at this point. Advertising looks great.
And to Tom's point, the market is OK with them spending CAPEX because advertising looks great. But yes, they, it seems, are a little more able to split out the AI and the impact that AI is having on their business than the likes of Microsoft. Certainly that on the Markets Live blog getting a lot of conversation, that if you can demonstrate that what you're spending is delivering, and it helps if you can put it in a different line on your P&L, then that is when the market will be a little bit more forgiving. But we saw that divergence in the share price, didn't we? I mean, basically one went up a lot and one went down a lot.
And I think what's really fascinating about the earnings story is that we can tie it to what's happening in metals and we can tie it to what's happening in inflation. Tesla coming out and Musk saying he's planning on building a fab, a factory to build semiconductors. We can get more on that piece later because we know about the pricing around semis. They're investing $20 billion in CAPEX. That's double what was estimated. This is not a car company story anymore. This is a robot story. This is a chip-making story. This is an autonomy story.
How do you price that? That's the problem I have with this. How do you put a price on what he's trying to do? Because they're clearly shutting the car company down, it sounds like. They're going to build the Roadster, but it sounds increasingly like they're shutting the car company. I've always struggled with what Tesla is. Was it a carbon credit company? Was it an EV credit company? Was it whatever? What is it now?
Yeah, and it's actually shutting down a couple of the models, isn't it? So even less of a car company than maybe we thought it was. I mean, when am I going to get my Optimus humanoid?
You are slightly obsessed with this.
All obsessed with these robots. I'm sure other brands will one day be available. But anyway, This is where the conversation is. Anyway,
that was Anna's Ofcom check. There are other robots available. Apparently.
Yeah, apparently
if you are interested, there
might be.
There
might be. But wherever they come from, the price of metals is making them more and more expensive to produce. So let's talk about metals, shall we? Copper going higher. That's the poster child this morning for the weaker dollar and all the other concerns that are pushing metals prices higher. Gold and silver also going higher. The dollar going down again, despite what Scott Bessent was trying to say yesterday, reiterating a strong dollar policy from the US administration. But this is a whole sector going higher, isn't it? This is Bloomberg Commodities Index. We've got that showing it's set for a record, set for another record. And this is quite incredible. It's gold, it's precious metals. We'll come to oil in a moment. But is this sounding a bit more inflationary? Or is it just a short squeeze? That's got to be the message, hasn't it? Or is it just a short squeeze that winds itself, up and down?
Do we have to separate the copper and the gold story? Do we need to separate those two out? Because the metals story feels like it's got a lot of nuance in it this morning. Gold is just going. Somebody at some point is going to say, you know what, the party's over, get out. And we haven't got to that point. The party is still raging, and you do wonder when that
person
party
will be brave.
Yeah, precisely.
5,500. So let's strip that. Let's put gold and silver to one side. Basic metals are just soaring. Don't underestimate the China impact. There was a really significant story out of China today. The 3 red lines that was the policy that led to the crackdown on the real estate sector and the continuous drop we've seen there. They are looking to ease up on that. That could be really significant. You get a more build-out of real estate in China potentially, and the demand for iron ore and copper.
That is interesting, because also staying in China, Goldman Sachs saying they're worried about demand destruction in China from these higher copper prices. So that's on the other side of things. And also you're seeing regulators really concerned about retail investment, taking us back to the precious metals, really concerned about retail investor exposure in precious metals. And they're looking at the operation of some of the brokerages.
But isn't just the message from copper, inflation? That's what the metals markets are screaming at the moment, that inflation is coming. And you look at the cost of building AI data centers in America, labour's going up, materials are going up, metals are going up. The prices of this stuff is absolutely rocketing. The oil story is interesting as well. So let's just plug that into this narrative as well. The cost of energy is going up. Now, Trump is threatening Iran again, and the language he's using is pretty bellicose. It's not been enough on my radar over the last 2 or 3 days that oil has absolutely rocketed. We're up 6% in the last 3 sessions. We're back at nearly 70. Now, if you look at the year-on-year charts for crude, where did we come in? Where were we a year ago? 70. So the base effect on the oil story is being unwound pretty rapidly. So you then take that and plug it into the gasoline story, and you plug it into what Americans are paying, and you come back to the inflation narrative, that the kind of the downdraft that we've seen in energy prices that Trump has engineered maybe starts to come to an end.
Yes, and the US administration sending a fleet to the region, of course, and the language from the rhetoric building up, and the end goals and the objectives very unclear, because he talks about the protesters in Iran, but he also talks about the nuclear ambitions. So all of that lacks clarity. In amongst all of that, yes, you're right, oil goes to 69.51 at least on Brent right now. OPEC Plus is going to be meeting over this weekend, and they're set to hold output because there still is this idea of surplus. But you wonder how long that keeps the lid on prices. How that discussion
changes. You do not send an aircraft carrier and 3 guided missile destroyers from the South China Sea over an 11-day transit period to the Middle East if you're not serious about potentially putting this option on the table.
Sure. So you put the option on the table. Do you want to use that option, or is it just a negotiating tactic to try and pull the Iranians to the table and get a better deal? As you say, maybe on the nuclear side, I don't know is the honest option. How seriously? But the signal the market is delivering is it is serious. And that's the concern here. Oil is up by 6% in 3 days. Now, part of that's going to be the dollar. Part of that's going to be this commodities ramp. But some of it has to be, we're taking this seriously.
Yes, and maybe because we've been talking probably far too much about gold and silver. We haven't talked about this enough, but this really matters, and we're nearly at 70, as we say, on Brent. So that's the commodities story. That's the tech story. We have plenty of corporate conversations still to come through the programme this morning. We're going to weave some of these themes into our conversations with the CFOs and CEOs who are going to be speaking to us. We'll talk to the CFO of ING, Tanat Fujikar will be with us. Christian Klein, the SAP CEO, of course, crucial to the technology conversation right now, how that kind of business is expected to perform. Thomas Schinecker of Roche will be with us, so we'll certainly have a focus on pharma, a lot of politics involved there stateside. What does that mean for pricing? Charlie Nunn of Lloyds Banking Group will be with us, the CEO there. I wonder what he thinks of various global developments and things that are happening in the US and the banking sector, not to mention the UK market. Justin Hottard will be with us as well, the Nokia CEO. There's another business, Tom, increasingly plugged into the AI data centre story.
Let's flag what else is on our agenda as well, above and beyond those CEO interviews. Riksbank's rate decision comes through at 8:30 a.m. UK time. We will break that for you. The UK Prime Minister, Keir Starmer, is in China. He's been meeting with his Chinese counterpart, of course, Xi Jinping. The EU Foreign Affairs Council will be meeting in Brussels. And on the earnings front, stateside, we're going to get Comcast, MasterCard, Apple and Visa. Apple's going to be really interesting in terms of what they say about input costs. And at 1:30 p.m. UK time, US data, including initial jobless claims and the trade balance.
It's kind of a week in a day. It's kind of what it feels like today in terms of the amount of news flow. And we're not done yet. Let's talk about some of the other things you need to plug in this morning. The US, Danish and Greenlandic officials met yesterday to discuss a new framework deal for Greenland as Washington looks to address President Trump's demands for a stronger American presence in the Arctic. Danish officials say they're ready to negotiate and review cooperation with the United States on Greenland as long as it stops short of questions about the island's sovereignty. The UK Prime Minister Keir Starmer is promising to seek a, quote, more sophisticated relationship with China. He met President Xi earlier today during what is the first trip to China by a British leader in 8 years. And I can't believe that we've only got to this stage in the show and we're not talking about the Fed yet. But the Fed didn't do very much, as expected, leaving rates on hold yesterday. In his press conference, Chair Jay Powell emphasised the decision was supported by most of the FOMC, despite dissents from Governor Stephen Miron and Chris Waller, who is running to replace Powell as the Fed chair. Powell also defended the Fed's independence, which has come under sustained attack by, of course, President Trump. He was asked about staying on as a Fed governor.
Again, I don't want to get into this. Not something I'm. There's a time and place for these questions, but not something I'm going to be getting into today. Thank you.
As expected. All as expected.
I hate to do this, but I have to give it to Guy, because he did set this up yesterday. He did preview that the Fed was going to be a snooze fest, and it was. I was hoping the presser would be more colourful with those questions from Jay Powell.
Yeah, I mean, he was asked a lot of times, wasn't he, about all kinds of things that he didn't want to talk about. And so the line I took away was, I have nothing for you on that. And he said that quite a few times. That was his standard response to questions about pressure from politicians, about whether he'll stay on as a Fed governor, about dollar weakness. Also, that got the same treatment. This seems to be his new go-to line when he doesn't want to speak. But he did then, later on in the press conference, he was actually drawn on Fed independence and the importance of it and Fed credibility. He said that once it's lost, it's very hard to get back. And he didn't think that they'd lost it yet. You know, it's not gone. It's not all over. So it's certainly a priority for him.
He defended his position on going to the Lisa Cook case as well.
Yes,
which I thought that was actually quite
talking about precedent. He'd obviously done a lot of research on
that. That was the most kind of exciting moment for me. It was like, this is important.
Did you see the Polymarket odds?
Yes.
On the next Fed chair. Chris Waller throws his hat in the ring. By the way, I would like to have cut 25 basis points. That would have been my position.
Are you listening, Mr. President? Are you listening, Scott Bessent?
Yes. Polymarket has adjusted on that.
That's what I would like to do. But the market didn't move very much, and in some ways you could probably argue that Powell's probably done now. That's it.
There's a few people saying that. He's only got, 2 more meetings, and he sounded very much on hold because, yes, if we haven't mentioned the actual messages around the economy, there was a slight improvement in the labour story, wasn't there? And that seems to be the reason why everyone's assuming now that there's some sort of hold there at the Fed. Now, coming up on the programme, let us tell you more about what's coming up. Pharma stocks will be in focus at the start of the trading day after results come in from Sanofi and from Roche. Plus, we're also continuing to watch European tech shares after the US giants outlined plans for ever higher AI CAPEX. That was certainly the theme overnight. We've also had results out from SAP, of course, as well. Up next, we'll speak to the ING CFO after the Dutch lender's latest income beat story. If you have questions, if you want to get involved in these conversations, IB plus BBTV Go is the function on the Bloomberg terminal. It is Thursday. This is Bloomberg. Minutes to the equity market open here in Europe.
It is a very, very busy morning. There is going to be a macro top-down story. There is going to be a bottom-up earnings single stock story. We're going to digest it all. We're going to work our way. We've got 41 minutes to figure out what's going on, and then we'll bring you all the numbers. Anna.
Yeah, absolutely. So European futures in focus. Let's talk about some of the corporate stories that are going to build into the start of trade today. And we'll start with the banking sector. ING Group has reported quarterly profit beating estimates. The Netherlands' largest bank has also lifted profitability guidance for 2027. Let's speak now to Tanate Futracool, who is the CFO of ING. And I'm pleased to say joins us now. Tanate, nice to speak to you. Thank you for your time. Let's start with the guidance upgrade. So you're upgrading the outlook for 2027. What's the driver of that? What's the positive story? What's happening that's going well?
Thank you very much, Anna. I think the big story for us in Q4 and much of 25 is strong commercial momentum, right? We grew our customer base by 1 million primary new mobile customer. Loan growth coming out of Q4 is strong. Deposit growth is strong. And we recorded our 23 billion euros in revenue in 25, which is the strongest in the franchise. And a lot of that's driven by 15% growth in fee income. Our operating leverage is getting better. Our costs are flat year on year and quarter on quarter. Our capital management is strong, and that gives us the confidence to give the upward guidance for 26 and 27 as well.
OK, how resilient is the credit book, Tanate? I'm just looking at the loan loss provisions, and they're a little higher than the market had anticipated. Not by much, but a little. I just wonder what the story is there.
Yes, I think risk costs on any quarter can be volatile. But I think if you look at the overall credit cost for the full year 25, it's around 19 basis points, which is below our long-term 10-year average. So it's quite resilient. As you know, ING, we have a big book of mortgages, which are in mostly Northern European countries. And the performance of that book is very, very strong. And we maybe have a bit more volatility in the wholesale bank, but nothing that concerns us at the moment.
Tanate, good morning. It's Guy. Is ING going to have an exciting year? Is 2026 going to deliver the M&A that we've all been waiting for? Your CEO says there are too many banks in Europe, and he wants to fill in the blanks in ING's portfolio. Where are the blanks right now? Where do you think those exist? And what kinds of companies, banks, are you looking at?
Well, I think, Guy, if we look at our franchise, we look at growing organically, which I just said earlier. We are growing at pace at 1 million new primary customer per year. But having said that, we have seen a lot of domestic consolidation in many of the markets we operate in. And that is something that we certainly look at. But for us, maintaining cost discipline, capital discipline, return discipline is strong. So while we look, we make sure that any acquisition that we do, we don't stray from the capital discipline that we have. And that is something that we look on products that would give us more fee intensities or skills that we don't have.
OK. If you are too slow, do you think you're going to miss out? You can be careful and you can be cautious. But if a wave of M&A is coming to Europe in terms of the banking space, does ING need to be part of that?
I think we certainly need to be part of that conversation. And it's not that we're slow. We certainly, when major M&A happens, we're always looking, we're always reviewing whether it's appropriate for us. Is that I don't think we would miss a beat of an M&A, but it's our choice whether to engage or not engage.
Tanate, just briefly, and another line on this, because the CEO has spoken about this. Is Europe failing when it comes to catalysing consolidation in the banking space?
I think we could be making better progress in capital markets union and in particular banking union. And that's something that we engage with our regulator and stakeholders, that the progress that we see in making banking union a reality is going slower than what I think we had envisioned in the past. Given that ING is present in multiple European markets, we are very much a big advocate of banking union in Europe.
Is geopolitics a headwind for the bank or a tailwind when we think about things like defence spending?
I think it's a combination, but I think the market, as you know, doesn't like uncertainty, and geopolitical volatility bring a bit of uncertainty to us. But so far, there's a demarcation between what we see in terms of geopolitical volatility and the economic and the customer behavior that we see. And the customer behavior, as I mentioned, is very strong, right? Very strong demand for loans, both in retail and wholesale banking. And that's reflected in our earnings for 2025 and beyond.
Tonight, just a question on bonuses. 2 days ago, the Dutch Parliament voted to remove bonus caps on most staff, not on what it calls material risk takers, but on many, many staff. What difference is that going to make to your ability to hire and retain?
Well, I think this is a positive sign that the Dutch government is looking at having a friendly stance with respect to businesses based in the Netherlands. I think it will help us particularly in terms of attracting talent in the tech domain where the competition is very high. So we're warmly welcoming the new initiative by the Dutch government that was announced yesterday.
OK, Tanate Phutrakul, CFO of ING Group, thank you very much indeed on that profit beat at the Dutch lender, the biggest Dutch lender, of course, and questions on consolidation in the banking space.
This is the struggle. Europe needs to consolidate. It's got the CEO is not wrong. There are too many banks in Europe. Consolidation needs to happen. The political will to make that happen is the real challenge. And this goes back to the criticism of Europe. The US is deregulating, maybe too fast, maybe too far, but it's deregulating. Is Europe being held back by the number of banks it's got and the regulation that surrounds them?
Right, and sometimes we don't even get as far as the domestic consolidation. We see what happened in Spain, and clearly there were idiosyncratic things that were going on there, but failing to bring two banks together there. It seems that even domestic consolidation throws up so many regulatory concerns that we don't manage that, let alone the cross-border stuff. I remember we spoke to one European commissioner not long ago who said actually some of the American banks are better at coming into Europe because they can sort of nimbly operate everywhere without some of the politics that goes around with going into some other European countries' market.
It comes back to the bigger kind of, do we need bigger champions? Europe has always we have to have competition. That's been the regulation. There must be competition. We can't have these huge companies that can dominate. Does that mindset need to change? Does it need to change in the banking space? Does it need to change elsewhere?
Because the messaging from Brussels is always positive, but it's when it happens on the ground. It's domestic politics that derail these deals. And you see that in Germany and you see that in Spain. And that is part of the problem, is domestic politics. But you see that echoes in defence space as well, where you try to get combinations or companies that try to take a lead, and then you get France and Germany and then different industrial bases, and it becomes political and it gets derailed.
OK, we're going to carry on the conversation. This is a conversation that I suspect is going to last for a while, but the earnings season is upon us, and we have some great earnings interviews coming up. We're going to speak to the leaders of two European corporate giants. We've got Roche, we've got SAP on deck very shortly. They'll be with us in a moment. This is Bloomberg. Thursday the 29th. Good morning, folks. We've got 30 minutes to go until the start of equity trading here in Europe. Futures are actually quite interesting. And what they're telling you, actually, I think, is something about the bottom-up picture you're getting out of European equities this morning. So Stoxx 50 up by 0.2%. Similar story on the other side of the Atlantic. But look at the DAX. The DAX is a little light this morning. And you think about what's reporting in the DAX this morning. So you've got Deutsche out with numbers. We'll come back to that in just a moment. And SAP.
Let's get the details now and response to the SAP numbers that dropped a couple of hours ago. SAP falling this morning on Tradegate after fourth quarter earnings. Germany's most valuable company forecasts cloud revenue will grow this year as customers shift work there to the cloud from older technology. This ahead of a deadline to stop servicing legacy clients. Let's bring in Christian Klein, CEO of SAP right now. Christian, thank you for your time. Always appreciate talking to you. So you're guiding cloud revenue to grow at least 23% in 2026. Christian, can you give us some details in terms of what the upside risks to that forecast are and what the downside risks might be?
Yeah, so first of all, thanks for having me. Indeed, I mean, we posted great results for 2025. I mean, our total cloud backlog came in with a 30% growth, now up to 77 billion euro. And that's the foundation, for accelerate total revenue growth also in the years to come. Now, especially on cloud, very important to mention, already in Q4, 2/3 of the deals already included AI. So AI has clearly become the main driver of SAP's growth in the cloud. As customers clearly seeing now, hey, yes, there is geopolitical volatility. We need more resilience. We need to become more productive. And they understand an LLM alone won't cut it. So we need the business data, the business context, which SAP can provide us. And that leads us also to a very optimistic outlook for 2026.
Okay, it's interesting you talk about geopolitics being a catalyst for AI adoption, Christian. Can you give us some numbers, give us some data? What are you forecasting in terms of to what extent these AI products that you're now shipping will be a driver of growth and profit for SAP in the next 2 to 3 years?
I mean, for me, actually, it's super clear that in 2026, in the years to come, I mean, AI will just be a standard part of all of our solutions. Think about when you talk about geopolitical volatility, to give you one example. I mean, a lot of companies really want global supply chains. How can I still, run my global supply chain? How can I manage inventory? How can I manage smarter the demand? How can I make sure the assets are at the right point at the right time? And in the past, we had supply chain products for that. Now, this is all done by very smart agents. And again, these agents use the best LLM modules in the world, but they need the context, they need the business data. So actually, in all of our deals we are going to close in 2026 and the years to come, AI will be just naturally embedded.
Christian, good morning. It's Guy. SAP,
Hey, Guy.
its stock has dropped from this time last year, let's call it kind of circa 280. You're now trading at 196. You're not alone. Software companies generally are under pressure at the moment because the market is worried that you guys are going to get disrupted, that this is what the story is, that it's going to be much easier to disrupt you going forward. Microsoft is seeing the same thing. SAP is seeing it as well. Do you think there's validity to that argument?
Guy, I mean, yes, indeed. There is, of course, I see the concerns out there in the market. But more importantly, what I see with our customers is actually they're saying, hey, Christian, I of course, the LLMs will play a huge role. I mean, there's definitely a huge market and they are getting stronger and stronger. But Guy, I mean, again, I just met a customer yesterday and they said, hey, cash flow is a huge challenge for me. What kind of agentic AI capabilities can I have? And actually, they started with an LLM and then realized, hey, but what I'm missing is all my customer data. What I'm missing is all my data in support on the sales side, etc. So I'm missing the structured data. So at the end, it will be the combination of the two. So to have the broadest business suite in the world, to have all of these business data, petabytes of business data, is super, super important. And last but not least, I guess what also the investor community need to understand, it's about the data, but also the business context. These agents, they run businesses. And so they need to understand also the underlying context of how businesses are getting run. And that is what SAP is doing.
Christian, you sound like you don't think the investor community gets it. What is the investor community not getting? Is it true that you think the investment community doesn't get what you're doing?
Look, I mean, at the end, what the investors totally understand is, I mean, there's rightfully a lot of hype around infrastructure, semiconductors, and so on. And when you look back into all technological innovations which happened over the last 10 years, it always started on the hardware side of the house, because now these LLMs are so powerful because of, all the chips, all the hardware, the progress, we have made there. But over time, it's also always the same that the real value creation is lying on the apps layer. So the investors are, of course, now seeing, hey, first, the groundwork needs to be done, but I'm 100% sure that they already understand today that the value creation at the end to arrive on the business side of the house will come via companies like SAP.
Christian, good morning to you. How do you decide which third-party AI tools to work with, to integrate with, to allow your systems to be interoperable with?
Yeah, absolutely. I mean, we decided and we are actually super agnostic. I mean, look at Claude. We are using Claude already for a lot of planning agents in supply chain, in finance, because we see the module works really well. We, of course, also embedded Claude as a code generation tool on our platform. But we are also using OpenAI for Joule, our coworker, because we see that actually we can translate best voice to text with OpenAI, with GPT. And Mistral, we are using when customers are here and they have actually big sovereignty ask, we are using a European module. So customers can actually, make the decision, and we are making the decision and recommendation, because not every module performs best for certain business scenarios. And also what is true is that we can also change a module over time. It takes us 2 to 3 weeks to change the prompts, and then we are actually combining another module with our AI foundation. So we are very agnostic.
So you're agnostic on those tools. Christian, you talk about voice to text, which prompts me to think about something you said very recently, which really caught my eye and possibly will be interesting to the audience. You said this week that we're heading to the end of the keyboard because we will just use our voice to interrogate data. Talk us through what difference this will make to our work lives. I'm not sure if this is a good thing or a bad thing, Christian, but it will certainly be a big change.
I believe it's a good thing, because, honestly, I'm an end user by myself of our software. And, think about how many analytical requests, I did with an SAP system. I did a lot of sourcing. I did my T&E stuff with it. And in the future, you can use your voice. And actually, it's not only that you then just can tell the system, OK, please do this and that. No, the system comes back with very intelligent recommendations on how to source. It will actually also completely automate T&E, travel and expense. Why should you now, actually, again, type in data? Actually, this is what the system is doing for you. The system also does all the approval checks. And then at the end, you have actually completed a complete process. So the way how you work, the future of work is changing a lot, especially via these LLMs. And again, but it's very important that also then the digital co-worker in our world, Joule, also understands the business context to it.
We're going to leave it there. Christian, great to catch up. I love my keyboard. Please don't take my keyboard away.
Don't you love the idea of doing your expenses without having to use your keyboard?
Okay, that I'm up for.
Yeah.
But the keyboard, no. I want to keep my keyboard.
Christian, thank you very much. Christian Klein, the CEO of SAP. It's very thought-provoking, isn't it? The team has to bear with the fact that I can't type properly, and a lot of letters are missing when I'm typing during the show. But yes, I don't know what I'd do without it.
I can type quite fast. I like that skill. It's good. Anyway, particularly on this show.
You've honed it.
To communicate. Let's talk about what is happening in the pharma space. Sanofi and Roche are both out with numbers this morning. Let's talk about what is happening with Roche. The Roche CEO, Thomas Schinecker, joining us now on the back of the numbers that have been delivered from Switzerland, which look pretty good. They look pretty much in line with expectations. Everything is pretty much bang in line with what the market is looking for. You've had a good share price performance recently, Thomas. You've had a good run of data. Things are looking pretty solid. So here's my question, and I feel like I've asked you this question before in the past. You are basically coming out of 2025 with a 7% sales growth story. That's great. And you are predicting that you're going to see mid-single digits for 2026. Thomas, I don't see any headwinds. I don't see what would stop you achieving mid-single digits. You should be able to achieve that number with your eyes closed. Is it too conservative? Why can't I expect as a shareholder a better number?
First, thanks for having me on the show today. And if you look at the last 3 years, I think we've really delivered what we said we are going to deliver. And last year and the year before, we actually upgraded our guidance in the middle of the year. So you may say, yes, maybe then you were too conservative in the beginning of the year. But on the other hand, I want to say that in our history of 130 years, we've never missed a guidance. And you can guarantee, and I can guarantee, we'll not miss the guidance this year. So, of course, there may be an opportunity to do better. But I think mid-single digit has quite a range. High single digit, core EPS, I think that's a pretty good number. But obviously, there is always an opportunity to overperform.
So what you're telling me is you can guarantee the guidance. So there's no downside. There's only upside. That's the right read here, yeah?
What I can say is we've never missed the guidance. Our plan is not to ever miss the guidance.
OK. In terms of what would stop you missing guidance, are there any headwinds? I don't see any headwinds for you guys. The pipeline looks pretty good. Are there any headwinds that can cause you concern? Like what happens, what comes out of the White House? Is there anything that you can see on the horizon that would cause you any sleepless nights?
Well, so far so good. But being a CEO, you always have to work in scenarios, and you always have to look at things that could come eventually. And so, you have to plan for that. And I think that's also in my past, when I had different roles in the company, it was something that I felt helped me manage sometimes difficult situations because I was always prepared for everything. And so I think it's important to be humble. It's important to be also cautious, and then make sure that you grab the opportunities that come along.
Thomas, good morning. Let me ask you a bit more about some of the headwinds that could come along, and this is around pricing. How are conversations around pricing going with the US? Are we going to end up in a situation where prices in the US have to come down and prices in Europe have to go up? Is that going to be the end of this?
Yeah, as you've seen, we've signed an agreement, or Genentech, our company in the US, has signed an agreement with the US administration, together with a number of other pharma companies. We've all signed these agreements. And these agreements are not letter of intent. These are actually contracts with the US government. And based on these contracts, we are lowering prices in Medicaid, one part of the US market, for a certain number of products. And forward-looking, the goal is that there is more of a price harmonization across the US and Europe in all the other segments. But this is only for new products as we launch new products. And here we're having discussions with governments around the world to explain the situation and explain the idea of the US government that every rich country should contribute to funding innovation, right? And as we will launch a couple of products in the next 2 years, like giredestrant in breast cancer, where we had a phenomenal readout, which is really going to be the new standard of care as a backbone therapy for 70% of breast cancer patients. We will introduce it in the US, and then we will continue to have discussions with the European countries and see where we are. But some of the signals that I see are very optimistic.
Okay, so I hear what you're saying about this is only going to be for new products, but that harmonization, that will lead to a drift higher in the price of drugs in Europe then, it seems.
Yes, and some governments have already agreed to that, like the UK government. And we're in discussions with other governments, and they do see the need that they have to step up.
Thomas, what's happening on the obesity drug front? How much progress are you making there? It's a very competitive space. How will your proposition stand out from the pack?
Yeah, we just had a phase 2 readout for a molecule called CT388. This is a GLP-1 GIP dual agonist. And we've had phenomenal results. So after week 48, we had a weight loss of 22.5%, placebo adjusted, and there's no plateau. So we can continue to see the trend going down. A commonly used other medication that's currently on the market and is seen as the leader in this space has achieved a similar weight loss after 72 weeks. So we do believe we can significantly beat that. And so there is a lot of differentiation in the molecule, the way it binds to the receptor, that it's longer on the receptor. But there are other ways of differentiation as well, because there are 200 comorbidities. And so combination therapies will play a significant role. And we have more molecules that we can combine with than any of these other companies.
OK, so you're not worried that it gets to market too late, given the progress of some of your competitors?
We are only scratching the surface.
Okay.
At the moment.
Before we let you go,
only at the beginning.
When do we get an? Yeah. What do you tell us a little bit more about what you're doing with AI and drug discovery? When do we get an AI discovered drug?
So when it comes to AI, we have a huge program around AI in our company. Basically 3 levels of AI. One we call everyday AI. So these are tools that we're rolling out to every single employee, and we're upscaling these employees so they can be more productive in the work they do. The second piece of AI is we're taking 3 major processes in our organization and are using AI to completely change the processes. One is drug discovery. Second one is commercial. And the third one is service. And along the drug discovery value chain, We take every step of the way, and we use AI tools to accelerate, to make better trial designs, to do faster study reports, to do the regulatory filing faster, etc. And in the very beginning, we also use it to identify more drugs faster, more accurately, increase the PTS, and also more cheaply. And what we see now is we have a number of molecules in our pipeline that are coming from this effort. And we've actually doubled our output in the early stage of development through using AI. So a lot more to come, but I'm really excited about the progress.
Thomas, that's really interesting stuff. This is one of the areas we could see some real positives coming out of the AI narrative. Thomas Schinecker, the CEO of Roche, thank you so much for your time this morning. Just to say, Sanofi's also out with numbers this morning. It sees high single-digit full-year sales growth at constant FX, high single-digit. So that kind of a reasonably positive line coming out. But this AI, the AI story for drug discovery is really interesting, and so many people are so positive on what could come out of this. If we're looking for kind of benefits for humankind.
Yeah, absolutely.
And the question, I think, is when the regulators start to change the process around what can take 10 to 12 years to actually get a drug to market is the clinical trials. It's the phase 1, phase 2, phase 3. When you speak to people operating in the space at the drug discovery level or the AI level, that's a question for them. They can speed up the front end of the process, but it's whether or not regulators adjust and change given technology.
And then there's AI in the diagnostics as well.
Yes.
So away from the discovery, AI in diagnostics and how much, what the throughput of patients is going to be, how much bigger it can be if you have AI tools to use as a clinician. So, yeah, optimism.
I like optimism. Optimism's good. Up next, is Tesla still a car company?
It's time to basically bring the Model S and X programs to an end with an honorable discharge, because we're really moving into a future that is based on autonomy.
Up next, tech earnings, big day, lots to digest. We'll deliver all the news. That's next. This is Bloomberg.
Welcome back, everybody. This is the opening trade, 7:51 here in London. The futures picture looks positive overall, doesn't it? Euro Stoxx 50 futures up by 0.3%. A little bit of weakness, though, we detect, Tom, on the German market for reasons we have discussed. Some heavyweights reporting there. Yeah,
a bit of a mixed picture when it comes to SAP on one side, ST Micro on the other. Software and the hardware story back in focus for us today. Let's get more in terms of your stocks to watch this Thursday. Bring Chloe Mellet standing by. Chloe.
Good morning, Tom. Deutsche Bank is in focus today after pretty solid results. So it reported strong trading income in fixed income trading in particular, and also announced a €1 billion buyback. So this could boost the shares further, although it is worth noting that this comes just a day after the offices of Deutsche Bank were raided as part of a money laundering probe. But despite this casting a bit of a cloud over the outlook, the CEO said that this path towards becoming a European champion, this long-term strategy, was still very much on track. So we'll see what investors decide to really focus on this morning. Moving on to another German giant, and SAP expects cloud revenue to accelerate this year as more and more clients switch over to cloud technology. Now the question is, will this be really enough to lift the shares after this really big downward trajectory that we have seen recently? And investors are quite worried about the potentially negative impact of AI on those enterprise software companies. So SAP will definitely be one in focus today. And finally, speaking of AI, Nokia is also in focus today after it reported a fall in profits as it refocuses its strategy on artificial intelligence. So moving away from this telecom operators and more towards data center clients. And that's a strategy that has helped it outperform its most direct competitor, Ericsson. And so we'll see if this continues today, despite that fall in profits it reported.
Chloe, thank you very much. Chloe Mellet with us to look at some of those stocks in focus. A host of companies reporting. Not sure I'm spotting any sort of overall trend in this morning's reporting session, but interesting to reflect on yesterday where we saw that big divergence at the beginning of the trading day between what was going on with luxury goods and ASML. And by the end, they were both negative, and ASML was negative as well. And this seemed to be because there are concerns about actually the real economy. How fast can you actually build, how fast can their customers build the data fabs that will produce the chips that go into the data centers, and concerns around construction and the ability of the real world to deliver on the AI aspirations, I think is something
There's
to
actually a
watch.
nice piece on the Terminal talking about this, and the fact that this could be actually the constraint on the AI story going forward, and just kind of what tariffs are doing to it and what everything else is doing to it in America. But it's... The ASML state, was that, but also was there a kind of temptation to profit take? Like Samsung's interesting as well.
Yeah.
So Samsung kind of went up and then went down as well. And I'm just wondering whether there's an element of that. These stocks have gone quite fast.
The ASML, you don't see a price move with a heavyweight like ASML like that, where you start at 7% and end in negative territory, to your point. Samsung's really interesting because sales, they're up five times.
Amazing.
And they're profiting from high bandwidth memory. They're likely to get their approval from NVIDIA on their most recent chip. That will be a catalyst.
Yeah.
But maybe there's profit taking at the margins.
Yeah, absolutely. Let's also keep an eye, remember to keep an eye on some of the mining stocks again this morning.
Yep.
I mean, gold and silver still part of the story, but also the energy names. I mean, maybe that's what we'll be saying in 6 minutes' time. Look at energy stocks, because we're up by 1.4% on the oil price, threats around Iran, copper price is going higher, so watching things that, the mining companies with that exposure.
Bit of inflation, maybe in focus this morning. Anyway, the opening trade, 5 minutes away. This is Bloomberg. A few minutes ago, until we start trading here in Europe, there is a lot to price in. There's a lot to think about as well that came out of the United States yesterday. You've got the Fed to factor in, all of that, a story that Europe needs to deal with this morning, plus this raft of earnings that we've got to factor into our thinking, all the late tech earnings that we talked about. That is something that we need to price in. Yesterday's session, we faded initially and then kind of just went sideways as we waited for the big news to arrive. And I think that was the narrative. So I'm not actually sure there's that much that I can take away from this chart and plug into Tom's futures this morning.
Futures across the benchmark are pointing high, Guy, up 0.3%. You're right in terms of the tech story. One key takeaway was that the CAPEX spend around infrastructure is still there. So that filters through. For Europe, it's the software versus hardware. Again, we look at SAP. That's going to be a bit of a drag, it seems, on the DAX futures, pointing lower by 0.1%. FTSE 100 futures in focus with basic resources, copper ripping higher, oil in focus as well, of course, up on the geopolitical tensions in the Middle East, pointing higher by just 0.1%. Anna.
Yeah, let's have a look at some of the individual stocks in focus then, Tom. We'll focus in on the banking sector. We've had numbers from ING, but also Deutsche Bank, so that's going to be certainly one of the ones we're watching. Fixed income sales and trading revenue beating estimates, a buyback there. There is that raid that they've confirmed. How much does that cloud things? Perhaps not when it comes to the actual numbers reported. SAP in focus. Where will this one trade at the open? The current cloud backlog grew by 16% in the fourth quarter. Is that going to be enough? They've announced a share buyback as well. Tom was mentioning the copper price, which is up by 6%, so we'll certainly be watching what's going on with the mining stocks. We'll also watch what's going on with oil majors as well. We've paired those gains a little bit, but on the Iran tensions, oil prices heading back up towards $70 a barrel on Brent. We're at 69.26 right now, guys, so up just over 1%.
There is a lot to price in to these European markets this morning. Is it going to be balanced? Is it not going to be balanced? Are we going to see big moves one way or the other? Let's see. FTSE 100, no big moves so far. Oil stocks are going to be in focus. Miners are going to be in focus. We've got the Lloyds banking group out with numbers as well this morning. That's going to be in focus. We'll wait and see how other markets go. But initially, the Stoxx 600 is really just a reflection at this point, maybe of more UK stocks. I think the CAC's going to be interesting today. But it's going to be the DAX, I think, will be fascinating to see exactly how Deutsche trades this morning, how SAP trades this morning. The SMI's got a whole raft of pharma stocks that it needs to deal with as well, as has the CAC, actually. And Sanofi's going to be interesting to see what we get out of Sanofi this morning. Could be really quite interesting too. The IBEX is up by 0.2%. How's the AEX going to trade today? Sort of day two ASML, I think, will be an interesting story to watch out for. Got to price in all the tech. There is a lot going on. On balance, it looks like actually we are starting to see a little bit of outperformance coming through from the CAC and a little bit of underperformance. We'll see how the DAX goes in just a moment from some of the other key markets. Tom, sectors.
Basic resources at the top of the list. Not unsurprisingly, of course, given the pick-up in copper prices and across the commodity space, just much higher pricing that's come through in the session today. So basic resources as a sector up 2.5%. Tech is there, represented by the likes of ST Micro, up 1.2%. So tech is getting a lift as well. It's the second best performer across your sectors so far. Personal care, that is the sector with the biggest drop so far, down 0.5. Health is also down a little by 0.4%. But again, basic resources is the standout with the miners really in focus, Anna.
Yeah, absolutely. That sector up by 2.5%. 5.6%, so by far and away the best performer, and almost every stock in that sector is in positive territory, or a couple just into the negative now. But we've got things like Antofagasta up by 6%, so anything that's exposed to that copper price is certainly going to be very much in focus. Guy, you mentioned the day two of the ASML story, and that is indeed turning out to be a bit of a story. So ASML is up by 2.6% today, as if maybe oversold a little at the end of the trading day yesterday, but we'll see how that one develops.
Biggest points gainer in Europe this morning, ASML.
Right.
So ASML and Schneider, the two biggest holdings. Shell, Rio, Anglo-American, Glencore, Total. So the commodity story well represented in terms of the points gains that we're seeing at the top of the list this morning. What is interesting at the bottom, Roche is the biggest points drag this morning. Is Thomas Schinecker being too conservative with his guidance? He said, I can guarantee the guidance. There may be some upside, but is he being too conservative with that? Is that why the stock is tracking lower? Or is it the kind of themes that we've been watching over the last couple of days on pricing out of America and all those other kind of IRA stories?
CAPEX concerns, political uncertainty out of the US. But in terms of the pipeline, that was in focus. And in terms of their obesity drug, he's saying they're making really significant progress on that.
The pharma space is largely there. Three biggest points drags, Roche, Novartis, Novo Nordisk. AstraZeneca's not far behind. It's interesting, Deutsche Bank is lower by 1.78%. And I wonder, to your point, Anna, whether that's what is happening in terms of the raid that has been conducted on the headquarters, or is it something to do with the numbers? Actually, there's some interesting comments coming through about research as well that is worth watching. SAP, here we go. That is a big drop.
We all share the same sentiment around that one. Yeah, down by 10%.
That is brutal, given the 30% drop that they've seen from previous highs.
Yeah.
Wow, look at that.
There was a
10%
time we
drop for
this
SAP.
was the biggest company in Europe.
The most valuable. The valuation's been cut to about 250 billion. That compares to about 500 billion for ASML. But the point that Christian Klein was making to us earlier was, yes, it makes sense that the investor focus is on the hardware right now, but ultimately the value accrues to the application layer. I guess the question is, when does that become the story? Is that a 2026
But are they going to
story?
be... Will somebody else be there? The competition at that point is going to be enormous. And this is why software companies are being marked down as aggressively as they are. Like, their share price has been kind of one way for the last year, but that is brutal.
He's also saying, I mean, this isn't the area of real concern around CAPEX, but if you're spending on AI, markets want to see where it's showing through. And this is a story where it's sort of just showing through everywhere, was, I paraphrase, but one of the lines that he was giving us, it's in everything now. Whereas maybe something like Meta that's able to strip it out and say, we've spent a lot of money, but this is what you're getting for it. Maybe that's it. That's certainly what the Markets Live blog was saying.
They're really buying the dip in ASML, though. That's interesting. It's not fully been bought yesterday. So in terms of the share price over 2 days, we're up by 1.3% at the moment. But we have gapped higher off the lows that we hit towards the back end of the session, but we haven't fully filled that gap yesterday that was created at the back end of the session.
It tells you something about investor sentiment around these big AI plays, doesn't it?
It certainly does. Let's talk to, let's get an investor view. Frédéric Carrier, who's head of investment strategy for the UK and Asia at RBC Wealth Management, joins us on set this morning. Frédéric, very nice to have you with us. Our eyes this morning are very focused on the earnings stories coming out of Europe, and tech is very much a part of that. So maybe let's start there with your views on the technology sector. What we're learning through this earnings season about technology, what's caught your eye?
It is still early to really know what the trends are. Investors are focused on the CAPEX story. That seems to be intact. Still a lot of money going into building the infrastructure. The big question, as it was last year, is what sort of returns are companies going to get? And that's where there's still some uncertainty. So there's still a lot of noise, and we're still trying to get a picture. I think it will take some time before the full picture emerges.
Yeah, so in terms of, are you thinking about tech as a sector and investing strategically around different parts of the AI story, or it doesn't sound as if it's a big priority for you?
It's not a big priority. For Europe, there's a lot of noise. Well, globally, there's a lot of noise at the moment, and we think it's particularly useful to have a framework and things we can really rely on. And one piece of that framework is Germany, the infrastructure project. That is something news from last year. Implementation is this year. And we spent a lot of time looking at what sort of disbursement we are seeing in Germany. And if we look at the monthly deficit, if we look at the sentiment in the subsectors which are going to be affected by infrastructure, such as transportation, civil engineering, or construction, the sentiment in these subsectors is improving, as is the orders. So we are seeing some disbursement of these funds. often in transportation, building of roads, alterations, all of that can have quite a quick impact on GDP growth.
How does the run-up in metals prices and materials prices factor into that view around infrastructure and the infrastructure play? How do you factor that into your investment view if there's going to be higher pricing, maybe a squeeze on margins, maybe inflation?
So inflation, we have to see. We don't think that inflation is going to be a problem this year. Clearly, it could mean that if this increase in materials prices is factored in for people who use materials as an input, it could mean a squeeze in margin. But in terms of the sectors we are looking at in Europe, those which benefit from the fiscal stimulus, so industrials, materials, defense stocks, even banks, we think are good opportunities.
I'm just trying to understand how we're getting into an environment where we have stimulus and spending and higher metals prices and a massive build-out of AI on infrastructure and defense, and we don't get inflation.
Well, the massive build-out of AI is mostly in the US. That is where utilities prices are really being impacted. There is less evidence of that in Europe.
Okay. But
less evidence compared to the US.
But I invest in Europe, I don't invest in America. If the American economy runs hot, do I want to be part of that or do I not want to be part of that?
You want to have exposure to the US, that's for sure, yes.
How much? Am I downgrading? Am I having less this year than I had last year?
You probably have as much this year as last year, and compared to benchmarks, and you and I have had many conversations about what benchmarks are appropriate, but for each wealth client, with the appropriate benchmark up to his benchmark in the US, up to his benchmark in Europe. We think, or her, of course. We want to be involved, but not beyond benchmark, not take large overweight positions overall in our regions.
Would euro dollar at 120, 122, 125 be a good thing for European equities or a bad thing for European equities? Or does it depend on what investor we're talking about, if I'm an American investor or a European investor?
Well, that is part of the question, but in terms of the euro, you also have to look at not only the euro-dollar exchange rate, but
yuan.
Well, what the other currencies of the other trading partners are doing. And so far this year, where there's been quite an increase in the euro has strengthened against the US dollar, it has weakened against the Norwegian, the Swedish, and even the pound. And therefore, overall, based on this trading basket, the strengthening of the euro has really been marginal. And that extent of a strengthening compared to other trading partners, we don't think is an issue for inflation.
OK, so we watch the wider basket, not just the US dollar against the euro. Frédéric, let's talk about precious metals, because it's been such a theme of 2026 so far. January, incredible gains, certainly in silver, definitely in gold as well. And you have a very eye-catching gold. It's not a target, I don't think, but you have a number for gold that you think we could get to that's way higher than where we are now. Talk us through your rationale.
Higher, and we have to say that the current price is already higher than what we thought our optimistic scenario for the end of the year was. But we've looked at the length of the last three rallies since the 1970s, and on average the length was 1,062 days. The longest rally was just under 1,200 days. We are just under 850 days into this rally. So this rally could run for quite a bit more time.
And what does that mean for the price?
Well, we also looked at the number of all-time highs that were achieved last year on a monthly basis. So they were 5 on average every month. This year, in only January, they were 8 or 9. So all of this, if you put all of this together, it suggests to us that the price could reach more than 7,000 by the end of the year if these trends are maintained. And certainly the underlying demand for gold, that remains from central banks.
Do I wait until the party ends and the lights come on? Because gold and silver tend to go down fairly fast when they go down. Or do I get out before the party ends and the party's still going?
The party is still going, so you might want to be involved.
But when do I leave?
Well, when
that's
you
the
leave,
because the drawdowns, historical drawdowns in gold and silver are epic.
Yes, yeah.
So do I want to keep riding it until?
Well, you want to ride it and try and spot when. When the party ends.
But do you want to ride the pure metal, or do you want to ride the basic result, the miners?
Gold and silver, the prices, as opposed to miners.
Okay,
in our view.
But with your lens on the UK, FTSE 100 was well positioned in this environment. I mean, how does the FTSE 100? What is your outlook for the FTSE 100 given what the miners have done?
Again, it's a neutral position. We see the economy as continuing to muddle through, and no big vision in terms of improving things. So, it's a less interesting market in our view. Fewer rich pickings than in other markets.
Okay, Frédéric, thank you very much indeed. Nice to see you. Interesting gold targets, Frédéric Carrier, Head of Investment Strategy, not targets, sorry, for the UK and Asia at RBC Wealth Management. Okay, there's some really big moves out there. This board will not capture all of them, but it's going to capture some of them. We've got a big kind of drawdown in pharma. ASML is bouncing back, not completely bouncing back. Defence stocks are off today. Luxury's fairly flat. The actions in SAP, the eye-watering move that we've seen to the downside, catching everybody's attention this morning. Chloe Melle's included. What do we got?
Good morning, Guy. Indeed, it's not a good day for SAP. It's growth in the cloud backlog disappointed investors quite a bit. And so we are down more than 11% as a result. This is obviously a big problem given that the cloud is so essential to SAP's strategy going forward. And there has been also quite a lot of concerns around the potentially negative impact of AI on those enterprise software companies. And so we are down massively this morning for SAP. We are also seeing downward moves for Deutsche Bank because it seems that the earnings, strong earnings and also the buyback were not enough to reassure investors over the offices being raided as part of a money laundering investigation just yesterday. And so we are down about 1.5% for Deutsche Bank. Moving on to chips, and there we are in the green. STMicro provided a sales outlook that was ahead of expectations. This is a chip supplier to Tesla, to Apple, and so this is a sign that maybe there's a recovery, a pickup in demand from those consumer electronics customers. And then across the board, we are also seeing positive movements for the rest of that chip sector because that sentiment is still quite positive after ASML's numbers yesterday. Moving on to miners, and there we're also in a positive territory. Gold, silver, copper, all of those are hitting all-time highs because of geopolitical tensions. And then we also have a Glencore and Antofagasta that updated the market with the production reports today. And so these were seen as quite positive. And so we are up quite strongly across the board there for miners. And finally, ABB, which provides equipment for data centers, also is up very strongly after some positive earnings and also a 2 billion euro buyback. And so it is being rewarded quite strongly, up almost 8% for ABB.
Okay, it's really the hardware and software story once again in the spotlight, given SAP and then ABB on the hardware side around the data centres. Chloe Melle, thank you very much indeed. We'll get to banks performing well in the session. Lloyds Banking Group announcing a buyback as prelim. Fourth quarter pre-tax profits beat. We're going to be joined by the CEO of Lloyds Banking Group, Charlie Nunn. That's coming up. This is Bloomberg.
Welcome back. This is the opening trade. Now, Lloyds shares are pretty flat this morning, just a touch to the upside after the company announced plans to buy back a further £1.75 billion of its shares after both its core banking business and newer insurance and wealth products boosted earnings in the fourth quarter. We're joined now by Charlie Nunn, the CEO of Lloyds Banking Group. Charlie, really nice to have you on the programme. Thanks for your time. Let's start with what's going well, because the numbers seem to be ahead of estimates quite substantially for the fourth quarter in terms of pre-tax profits. 4 years into your strategy, I guess you're going to tell me it's delivering. What's the top line? It looks as if we have lost our connection. There you go. Yeah. We have lost our connection to Charlie. We will try and re-establish that. Yeah. But it does look as if they are 4 years into this. Yeah. They are 4 years into this strategy, and so interested to see how they think it's going right now.
So it's interesting. So end of the strategy. So what's the outlook here? Return on tangible equity, let's call it circa 15 now. Does it get boosted to 16? How much further could they push that? Yeah. You've got the motor financing thing. I think you could put that in the rearview mirror. What happens with the housing story? Yeah. Or stable housing market? Does that boost lending? There's a lot to sort of think about what happens next.
Let's try again. Charlie, that didn't go well, so we're going to give it another go. Charlie Nunn, the CEO of Lloyds Banking Group. I hope you can hear me this time. So I'm saying it looks as if the numbers have come in better than expectations, and you're 4 years into this strategy. How has it delivered, and what's next?
Thank you, and sorry about that falling off just now. Look, it's been a strong year in 2025, and that's what we're going to talk with our investors later today. We've continued to grow the business, and we saw 5% growth in lending, up 22 billion in the year, 3% growth in deposits. We saw growth in market share in a whole set of our businesses, and that's really core for us as we look to the future, building that momentum. And we saw our other operating income continue to diversify and grow at nearly 10%, 9% up year on year. And that's our fourth year of that kind of growth rate. So good in that context. We're continuing to innovate and really bring new services to our customers across the businesses. And we're very confident in the outlook beyond this year, for this year and beyond. And of course, that's enabled us to increase our dividend 15% and another big buyback.
So, Charlie, your net interest income looks to be in line with estimates. Tell me about the hedge maturity profile and where we are in that, because I know that the full benefits of higher rates, which we have lost recently, but they don't flow through at the time, they flow through over time. And I wonder if you can tell us, therefore, what we should expect, how that profile looks.
Yeah, so one of the key things we've been doing at Lloyds Banking Group is making sure we continue to win trust from customers around current accounts, personal and business, and we've grown market share in those. And what that means is we can have a longer dated structural hedge. And so we've said again, last year we delivered a significant uptick in our structural hedge income, about £1.2 billion. This year we're projecting £1.5 billion. And we're saying again through 27 and into the back end of this decade, we think the structural hedge will continue to be a tailwind for Lloyds Banking Group. So that then alongside growth in the balance sheet and growth in the activity with our customers gives us confidence around the top line growth of the group to be significantly above the rate of growth of the economy.
Return on tangible equity, Charlie, that's going to get better this year than it did last year. Talk to me, which other metrics are going to get better in 2026?
Yeah, so we've had now, since our strategy was announced in 2022, some key guidance. The first one was return on tangible equity, and we're now predicting that will be greater than 16% in 2026. Of course, also our capital generation, we're predicting greater than 200 basis points of capital generation for our shareholders. And then finally, cost-income ratio, so our efficiency, our operating leverage for the group, for our investors, we're saying will be less than 50% by the end of this year. For us, that's really important. It's a staging post, and we can see momentum for all of those metrics beyond this year.
Charlie, just a sort of wider question. What does credit quality look like right now in the UK? It seems to me we've got a reasonably stressed consumer. Is that the reality that you see in terms of your credit books?
So actually, no, we don't see that. We actually see credit quality and the resilience of the consumers at very low levels relative to history. Our outlook for the economy this year is what we'd call a resilient but slow growth economy, going about 1.2% GDP growth. And when you look at our credit quality, last year we only had about 17 basis points. That had some adjustments in the models. But we predict actually that about 25 basis points is our guidance for this year, which is below the long-term run rate. And underpinning that is we're actually seeing that households and businesses in the UK have got the strongest financial position we've seen for a very long time, since before the financial crisis. Higher savings, higher cash flows, less indebtedness, partly based on lower spending and investment. And that's the opportunity to help get confidence back into the economy so we can move to a higher growth trajectory.
Charlie, what's the mortgage market looking right now? Because parts of the real estate market, parts of the property market in the UK are looking soft. I'm thinking of London in particular, but of course rates have come down. What is your outlook in terms of the mortgage part of the business going forward?
Well, first of all, in 2025, we actually saw overall house prices only increase about 0.3%, so quite sluggish in terms of house price growth, but quite a strong mortgage market. We actually did, for example, £17 billion worth of first-time buyer mortgages, and we increased our total mortgage lending by £11 billion in 2025. Look, we think that confidence for consumers to continue to grow the mortgage market this year is still there. We think it'll be about the same kind of scale of market. We think house prices will grow about 2% this year. And obviously what's supporting that is this strong savings and cash position of some households in the UK and a reducing rates environment. We're still thinking rates will come down 2 times this year.
OK, 2 times, 2 additional cuts on the BOE. Charlie, what are you doing on AI? If I was an investor, I might be asking a question around whether or not companies like Revolut, which has a bigger market valuation than you do right now, about 75 billion in terms of the last numbers, whether or not they're starting to take market share from you, and whether or not you're acting quickly enough, you and the team, to embed AI into the product.
Yeah, actually, our market share in dollars is 80 billion. But in terms of AI, look, we've been a leader on AI for a long time. We already have 800 AI live models. We've delivered a lot of the revenue growth, the strategic revenue growth, and the efficiency savings over the last few years using that. And we're very excited about the agentic AI and then digital asset growth we see in front of us and the opportunity to improve how we serve customers. We're going live this year. It's already in customer testing and pilot testing with some agentic AI advice services for customers to help them with investment advice to get more out of their everyday spending. And we think it has the potential to really transform how customers experience our services. And of course, we do see lots of opportunities to improve efficiency and the effectiveness of the group.
Charlie, how much are you spending on AI and how much are you getting back from that spend? What's the return on that spend?
Yeah, so we haven't given the specific investment in AI, but actually most of the areas we're innovating, given that we have the biggest digital bank by far in the UK, growing at by far the highest rate, faster than all of the fintechs, it's a material part of our investment. What we have said again today is in the last few years, we've delivered £1.9 billion worth of cost savings and £1.4 billion worth of revenue growth linked to strategic initiatives. And about 60 to 70% of both of those numbers is driven by our AI and digital investments. So it's really material today, and it's going to continue to be a source of innovation and improvement of our customer services going forward. So we're very excited by it. We are the leader in the UK banks, as proved by surveys like Evident AI, and we intend to keep that leadership position as we go forward.
Okay. Charlie, just briefly, if it's possible, do you think the UK should be concerned about reliance on US payments companies, geopolitics being what it is? I think of Visa, MasterCard, Apple Pay, Google Pay, the list goes on. Is that a structural concern for the UK banking sector, do you think?
I think it's a really good question and one that we obviously think about a lot. Obviously, our domestic UK payments and the majority of payments in the UK don't run on those rails. They run on domestic retail payments rails or intra-bank rails. So we do have some more resilience than is sometimes talked about. But I do think the developments, especially around stablecoins last year, are important. And I think you've heard me talk about before, we're working with the other major banks in the UK to lead on something we call GB tokenized deposits, which is to bring the value of modern technology to our payments infrastructure system-wide. We're looking to try and launch that in the first half of 2027, if we can get the support of the regulators. And we'll bring massive benefits to our customers and will future-proof payments so that the UK can continue to be a leader in payments into the future.
Okay. Really interesting. Really appreciate your time this morning on the back of the earnings. Charlie Nunn, CEO of Lloyds Banking Group. Coming up, Nokia's fourth quarter adjusted profit falling 3%. We'll get to a conversation with the CEO of that company. That's Bloomberg coming up. This is the opening trade. Happy Thursday. We're 30 minutes into today's session. It is a busy day. You've got the Fed, of course, coming through with the expected pause, but two dissenters, and then the earnings front. And this divergence still in terms of the tech story, hardware versus software. Across the headline basis, you're seeing gains in Europe, 0.5%, a pretty decent response so far this Thursday to the earnings story. Some decent numbers coming through from the banks. Again, a mixed picture on the tech front. The DAX down 0.4%. SAP is a big drag there. Over in France, CAC 40 gaining 0.9%. ST Micro on the other side of the tech story performing well. FTSE 100, basic resources, copper prices, iron ore prices, oil all up. That is lifting that sector. So across the FTSE 100, gains of 0.6%. We're breaking the central bank decision as well from Riksbank, holding at 1.75%. That is the third straight hold for the Riksbank, as expected, keeping rates on hold at 1.75 over in Sweden. Guy.
Let's get back to the equity market and talk about the internals we're seeing within the stock 600. 393 up, 189 down. The balance definitely that we are seeing a more positive picture emerging, but there's some key standouts on the downside that we're watching out for. We'll get to those in just a second. Volume's actually pretty good, unsurprisingly, on such a busy day. There's so much to factor and price in to these markets. Upside, ASML bounces back, but not completely. Yesterday was an amazing round trip for ASML. The stock this morning up by 3.63%. The data center story is working for ASEA Brown Boveri, the Swiss-Swedish engineering company, up by 7.71%. The metal story is working for Rio. It is up by 2.53%, capturing some of the stories we're watching this morning. Downside, SAP off its lows but being battered on the back of the numbers. Nokia is also sharply lower as well. In theory, a telecoms equipment company trying to be maybe a data center telecoms company. Nokia down by nearly 6%. And Deutsche Bank on the back of its numbers. And there's a lot of other stories floating around about Deutsche, the raid on its headquarters, the raid on its business, and also what's being said about independent research this morning. Both fascinating stories, but the core number, the stories that we're watching out for, maybe the focus of investors, the stock down 1%, Anna.
Let's get an update on some of the political themes we're covering this morning then, Guy. The UK Prime Minister Keir Starmer is promising to seek a, quote, more sophisticated relationship with China. He met with President Xi earlier today during what is the first trip to China by a British leader in some 8 years. President Trump has warned Iran to make a nuclear deal with the United States or face military strikes even worse than last year's. In a social media post, Trump says the fleet he's ordered to the region, led by an aircraft carrier, is ready to fulfill its mission with, quote, speed and violence if necessary. Iran's UN mission responded on X, warning if pushed, the country will defend itself and respond like never before. NVIDIA CEO Jensen Huang says his company has not yet received any orders from Chinese customers for its H200 AI chips. This as Beijing is still deciding whether to allow imports of the US firm's components. Elsewhere, The Information reports that NVIDIA, alongside Microsoft and Amazon, is in discussions to invest as much as $60 billion in OpenAI as part of a major new funding round. Tom.
Let's get to the telecom story then, with a focus on Nokia. Guy was talking about the pressure on the stock right now. Nokia shares slumping this morning after its fourth quarter earnings. The numbers come as the Finnish mobile equipment maker streamlines its business to focus on AI. We're joined now by Justin Hotard, CEO of Nokia, for an exclusive conversation. Justin, thanks for joining us. What do you think the response is? Why do you think there's a negativity in the market? Is it that this pivot to AI and supplying data centers, well, their connectivity is just taking longer, that the execution is going to be more challenging than maybe you and the team expected?
Well, I think, Tom, first of all, if you look at our results, we're in line, actually slightly above what we said we would do for the fourth quarter of the year. So I'm very pleased with how the team has executed and very pleased with the progress we're making on our transformation. Look, as you know, in the AI world, there's always a lot of different expectations. The reality is we're doing exactly what we said. We're seeing very solid growth in optical networking in particular, 17% on a constant currency basis year over year. And then on the other side, if you look at book-to-bill in both optical networking and IP networking, which are really where we're playing in AI data center today, strong book-to-bill, which shows further demand growth and obviously good growth potential for us.
Is the constraint then less about the demand and more about supply when it comes to your AI pivot? Are you able to meet the demands of your customers?
Yeah, no, I think absolutely. We're first of all, the entire AI data center business right now has constraints, as you know. I mean, there's different dynamics happening. Memory constraints have been talked about a lot over the last few weeks, but there's also there's been other constraints, not just energy, connectivity, silicon. Right, there's a set of things that the industry has been in constraint, which is why I think this is also going to be a much longer and more stable growth trajectory for the industry. But for us, good growth, ongoing demand. It supports what we believe is a solid growth opportunity for us in the market, and I'm pleased with again how we've executed, and pleased with the opportunity ahead for us. Key thing for us is to make sure we're focused on executing for our customers and continuing to innovate.
Justin, can I just ask Tom's question in a slightly different way? Are you being conservative around your guidance on the data center front because of execution risk? Are you just having to be conservative at the moment? Investors are looking at this and trying to fathom whether that's the case.
Yeah, Guy, I think first of all, as I've said, I want to make sure we're a company that sets commitments, executes on those commitments, and we're predictable. And what I'm really pleased about over the last couple of quarters is we've set a foundation for doing that. But it's 2 quarters, and as you know, that's not something that implies a trend. So my focus right now is making sure we're continuing to build on the momentum we see in the market. We're guiding 10 to 12% growth in optical and IP switching. As we said, optical is one where we have traction that is further ahead and more mature in the AI and data center market. IP switching is earlier for us. But I want to see us, continue to execute against our commitments and deliver for shareholders. And the story of the last 2 quarters is we've done that, but we've got a lot of work to do to be consistent about doing that. Again, because that's something that takes multiple quarters of consistent execution.
Okay, where is the bulk of the business? Where is the bulk of the business opportunity geographically going forward in the AI data center story?
Yeah, I think the reality today is the bulk of the business is where the data centers are being built, largely in the U.S. and North America. I'm optimistic we'll see continued demand. I mean, you obviously see the news of investments being made in Europe, but largely from some of the major AI and cloud players today, and emerging in Asia as well. So I think today it's still very much in the core AI and cloud players. Sovereign AI, there's a lot of discussion. But it's much earlier, in terms of government-driven sovereign cloud investments. But again, I think that's a play that will come out over time. For us right now, it's making sure we're delivering for the big customers, and then of course supporting all of the geographic opportunity we have, particularly here in Europe.
Justin, good morning to you. I know that you have a partnership with NVIDIA, and we know that NVIDIA has invested in Nokia. I wonder if that partnership, that technology partnership, is delivering what both sides want. What's the experience there?
Yeah, hi, Anna. I'm very pleased with the progress we're making. This is a relationship that has been in place for a few years, going back to the announcement of the AI RAN Alliance on the radio side, and the work has been ongoing. We shared when we made the announcement in October that we expected to have proof of concepts and trials later this year in 26. We're well on track to do that. Really pleased with the partnership, and very excited about the opportunity. I think there's a lot of recognition from certainly from our 2 teams that there's more work to do, but tremendous potential, and that as AI moves into physical AI, which is things like autonomous vehicles, augmented reality, robotics, that networks fundamentally need to change. And that includes telecommunication networks if they're going to serve and deliver these types of workloads. So the innovation, the partnership is very strong, and really pleased with how things are progressing.
This is a business that has pivoted many times, Justin, in many decades of history, from paper mills to now data centers via mobile phones, as we remember. Justin, what's the investor? How does the investor pitch go? How receptive are investors to you being part of the data center build out, or is there any expectation that you stick to other areas?
Yeah, look, I think it's very clear that we are a company today that is focused on, our largest customer base is telecommunications operators. Our biggest growth opportunities in AI and cloud. I think investors obviously want to see us move into the growth that's happening in AI and cloud as quickly as possible. There's a lot of support for that thesis, but of course we also have to recognize, and you touched on this, given the pivots, the change, and candidly, the fact that we haven't demonstrated consistent execution in our financial results, that we're a bit of a show-me story. And again, that's why we're being disciplined around execution. And I'm really pleased that this quarter, the team did a great job in showing that we were executing as we said we would.
Justin, does that pivot mean that you might be putting assets up for sale in terms of the legacy part of the business?
Well, one thing we did announce, Tom, in November, is that we have a set of assets in portfolio businesses. These are assets that are good businesses, but they don't fit with our capital allocation priorities. In some cases, they're not at a scale that will meaningfully impact our portfolio. And so those are things where we're looking for the right outcome for those businesses. And in some cases, it might be a different owner of those businesses. But they're also very good businesses. They have important customer bases. And so we're not, in many cases, not exiting those businesses or winding them down. But we are looking at whether there's a different owner. And as you look at the business now and effective January 1, what you will see, as you look at Q1, is us reporting in network infrastructure and mobile infrastructure, and then an incubation business in defense. And those are really the three platforms we see for long-term growth and where we're deploying capital against those opportunities.
Justin, great to catch up. Thank you very much indeed for the time this morning. We really appreciate it. Justin Hotard, the CEO of Nokia. Stocks down circa 6% as we speak. Let's turn our attention back to one of the other narratives that we are watching so carefully this morning. Commodities absolutely on a tear this morning. The record-breaking rally getting fresh momentum. Gold is up, silver's up, copper's up. Fresh record highs for many of these metals. Let's go to Martin Ritchie in Shanghai to talk about this. Let's start with copper, Martin. Who is buying all of this copper at this price?
A very good question, and it comes after a really extraordinary month for trading in metals. I feel as if I've been on TV every day talking about the markets, which shows you how special January's been. What we've seen over the past month is a sort of wave of trading activity in China, and we've seen record volumes passing through the Shanghai Futures Exchange. A lot of big funds getting very bullish on copper in particular, on aluminum as well, pushing those prices to a record high. And today it seems to have culminated in this extraordinary spike that's kind of fed across to the London Metal Exchange. 8% up for copper. It's the biggest rise since 2009 in one day, so it's a pretty extraordinary day. And this sharp rise in prices is bad news for anyone, as you hinted at, buying copper, especially since downstream demand in China is not particularly strong at the moment. So there's this very strange discrepancy between very bullish momentum, kind of driven by macro factors, the debasement trade, weaker dollar, everything else, and the kind of conditions on the ground in China. How that resolves itself remains to be seen.
Martin, yes, absolutely. So a lot of focus on whether the Chinese demand will still be there at these prices. Let's move to another metal where we're also seeing incredible moves in the month of January, and that is gold. I'm seeing more and more references, though, to a gamma squeeze, to a short squeeze on gold. So how do you get under the hood of what it is exactly that's driving gold and silver higher?
So gold's gains have been so big that I think they're starting to change the kind of market dynamics and participation a little bit. At these kind of levels, it's a bit more risky for banks or the traditional big players in the gold market to really trade, and that creates thinner trade, thinner liquidity, which tends to mean more volatility. And as you said, you were referring there to the gamma squeeze, where some dealers are selling, have to sell options, so they're buying into the futures market, which is in a illiquid market that's sending up the prices of gold even higher. Again, it's been extraordinary gains for gold. It's way past even levels that I think most bullish analysts saw at the beginning of this year. So it depends on how those the kind of sort of stranger outlying dynamics kind of calm down in the next few days.
Martin, thank you very much. I think it's going to become a market indicator for higher energy prices or other metals prices and inflation. How many times in a month Martin Ritchie is on TV? And in January, that's been many times. So we thank you very much, Martin. Maybe we'll see you tomorrow. Who knows? We'll see what happens in these markets. But it is increasingly a focus, incredible volatility. And it's really interesting, the line he said there about how banks, their balance sheets are constrained to the extent they're able to get involved in these markets right now, such as the volatility that we're seeing in some of these metals.
Are we getting to the squeezy phase, though? Is this gold? Maybe is a different story, but the copper story I think is fascinating. If the underlying story is not there, is this how much more sustainable could this story be, and what happens when it comes to an end? The gamma works also in the gold market. The gamma works both ways and can work on the downside very, very sharply as well.
What I'm really enjoying about the news flow today is that you can join the dots between what's happening in metals, what's happening in tech, and what happens with the Fed decision as well. You do not get someone like Elon Musk committing to spend $20 billion on CAPEX, double the estimates, and particularly on a foundry to make chips, if you don't think that there is, number one, the demand, but also question marks about how you feel that he's building a foundry is because he can't get the chips.
But that industry is so cyclical.
All of these metals.
That's so cyclical, that industry. Are we going to get an overbuild will. Do we end up with a situation
We've been there
in
before.
a year? Precisely.
Yeah.
Again,
So how do you hedge for that?
Precisely. Timing around this is insane.
And at the moment, it's amazing that a lot of the constraints on this incredible technology, AI, are very much real-world ones. Can you get the builders to build the data centres? Can you get all the metals at the prices you can afford to build the chips? So, yeah, fascinating.
And the Nokia CEO telling us that on optical, on energy, on chips, on the labour force, all of those things are constraints right now.
It's amazing. He's basically saying the guidance is constrained because I don't know around all those issues how it's going to work.
So how can you price and how can you build cars cheaply? Here's the pivot. Coming up, Stellantis slashing prices for Fiat, Opel and Peugeot models in France, despite all these higher input costs. What is the car maker's new offer then on the Fiat Pandina model? Take a guess. We're going to give you the answer when we come back. This is Bloomberg. Before the break, we asked you at what price is Stellantis offering some Fiat Pandina models in France? Well, the answer is, drumroll, €9,990. Just a snip under 10,000, of course, for the 1-litre engine hybrid city car. Our floor manager, Sean, had what did you say, Sean? 15 to 20,000? 15 to 20,000? So it's below 10,000. Sean got it wrong. Deflation in car prices is real. The automaker is slashing prices for its Fiat, Open, I think that meant to be Opel, not Open, and Peugeot models in France in a bid to increase production volumes and stabilise the performance of key brands after dramatic market share declines in recent years. Can I see Guy in a Fiat Pandina?
So I have to say, the old Fiat Panda, the really boxy the 4x4 version, was the most amazing car. You could go anywhere in that thing. It was I'm being pejorative here. A tin can on wheels, but it would go anywhere.
It was from what decade? They were all tin
ages
cans
ago.
on wheels, weren't they? So I don't think it's pejorative.
No, but it would go. That thing would go absolutely anywhere. So this thing's got big shoes to fill, is what I will say.
Apparently, it's supposed to be pocket-sized. The price, yes, you're right. The prices are coming down. I mean, this is Chinese competition, isn't it? This is where a lot of the research said that people wanted cheaper cars at the lower end. And
why does it look like? Why is it? It looks like it's meant to go off-road, but you said it was a city car.
I'm not sure I'd take that off-road.
I don't know. It is very small. It's supposed to be a city car.
Yeah.
Let's tell you what is coming up on your day ahead. The UK Prime Minister is in China. That's in the rearview mirror and looking ahead because he's still there and he stays there for a little while. EU Foreign Affairs Council, that's meeting in Brussels. US earnings. We have MasterCard and Apple and Visa still to come, so a sort of payments and tech theme coming. 1:30 p.m. UK time, we get US data, including initial jobless claims and trade balance. The focus has not really been on the data of late, has it? It's been in other areas of the market.
Yeah. The Fed was a non-event. I can't quite... If Valerie Titel is watching, I apologise, OK? So I'm really sorry. But the Fed was a bit of a non-event last night. I think Powell actually wanted it to be. So that's not the story. Was Skylar Montgomery Koenig excited by the Fed last night?
I mean, not particularly.
Okay,
it was
fine.
largely
So
as expected.
Let's just move on from that. What's happening in gold and the ratios? Everything's just bonkers.
Yeah, well, I had someone send me the gold-silver ratio the other day, and it's at a multi-year low. It's so low. And it's interesting because this is something that we used to look like as a signal for the economy, as in silver has more industrial uses, and so as that ratio declines, it's because the economy is doing better, whereas gold is the more safe haven. And I'd say, yes, that could be what's happening now, as in the economy is quite strong, you're having stuff like copper bid up. It could also be speculation in that you have very different market sizes, so gold is bigger than silver by a significant amount, so if you have that speculation flow into silver in the same amount, it's much more impactful on the silver market. And so, I definitely don't think it's one where you're looking for a reversal. And especially with gold, you're starting to look at levels on RSI basis, for example, that look very stretched. But I'm also not sure that there aren't dip buyers still.
I remember a world where this used to tell you something about the real economy. I'm not sure whether silver up 65% year to date tells us anything sensible about anywhere.
Maybe, or it tells you that people are really worried. Are people fleeing for the sort of safe haven? Are they worried about the dollar? Is this a kind of structural shift that we're seeing in the global economy?
So Scott Bessent came out and tried to play the grown-up in the room again, tried to play the comforter for the markets and said, we do back...
Are you saying his boss isn't the grown-up?
I'll leave that with you. We do support a strong dollar. Was that the most interesting comment from the Treasury Secretary, or was it his comment about not intervening to support the yen?
I mean, it's not intervening, right? As in, that's what changes the story around the dollar significantly, and particularly with respect to the yen, is markets got all excited last Friday because you had that rate check out of the U.S., and so the question became, will the U.S. be selling dollars? And there's no limit to the amount of depreciation you could get there, right? It's not like Japanese authorities. There's no limit on how many dollars you have to sell. So you could get significant downside. The question is just why now? It could be because you have JGB yields that are rising, and that's pushed up U.S. yields, but you probably just want stability in that case rather than a huge amount of dollar downside. So I don't think it's particularly concerning going forward. I think it's something that will probably move on from now. But, you know, if it was a real possibility, it would be impactful.
It seems that the US is doing a lot to weaken the dollar anyway.
Yeah.
So would this be a time, I mean, you could lean into it, I suppose, with intervention, but from that perspective, you wonder whether intervention would need to be the thing to do. What's the focus from here then, Skylar? The day ahead, you know, just went through some of the things on the agenda. There's some data, but it's not, you know, what do we look ahead to? What gets us excited? I mean, we're getting into earnings season, which might deliver some clarity.
Yeah, I mean, I think the earnings season so far is still pointing to relatively strong earnings, relatively strong growth. For me, the question I'm really trying to grapple is, will we return to fundamentals as a driver of markets? So like the dollar, for example, the move we saw on Tuesday, yes, you eventually got a catalyst later in the day in Donald Trump's comments, but there wasn't a catalyst, as in it's detached from fundamentals. If you look at euro-dollar versus rate differentials, you're now seeing a move apart, and you've had the economy hold up, rate expectations pushed out, so there's not a cut expected until July, and at the same time, you haven't seen this mass selling or underperformance of U.S. assets, particularly since the dollar's decline. And so the question is, if you don't really know what the fundamental reason for the dollar decline is, how do you know what's going to stop it?
But haven't we been through large periods where you look at interest rates and they haven't told you much? I remember large periods of time when that wasn't the case. So what is the market trading on?
Well, I mean, this is what the worry is. You don't know really what it is. It could be hedge ratios adjusting. So that's what we saw last year, and that implies a level adjustment lower in the dollar. It could be speculation, and that makes me a little bit more worried because it'll be stickier. And even if you have positive dollar drivers, they probably have to be quite big to see a move. But it makes it harder for investors, right? Because if you're so detached from fundamentals, what do you use as your guidepost?
OK, Bloomberg Skylar Montgomery-Koenig, thank you very much indeed. The gains in Europe have actually come off slightly, still up 0.3%, but it had been a stronger start to the session.
Yeah, absolutely. We're still seeing, in terms of the sector breakdown, basic resources still flying. That's still really the story. Energy stocks also firmer.
SAP's
SAP to the downside. The fog is cleared in London. That's it for the opening trade. The Pulse is next.